Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at Brevant.com/wins.
Well, a mixed day in grain and livestock futures trade on Thursday. Mark Schultz with Northstar Commodity is back with analysis. Well, Mark, let's talk about soybeans, getting all the headlines with this trade deal and purchases from China. But how high do we have to go here yet to price all this in?
Well, good question. And I think for the most part, the market responded here. For starters, it went sharply lower right around 2 o'clock in the morning, managed to turn back around and then finish up near its upper end of the range here today. So technically looks pretty good. Farmer selling was aggressive the previous 2 days. Today, what talked to a couple elevator managers about whether they bought a lot of beans, and the answer was no. It was extremely quiet. So I think right now maybe the farmers turn just a little bit more to the friendly side here for the time being. Watch to see how we close here. We went up against some pretty strong resistance. We're above it now. We'll see if we can make that close because you're going to finish off the week and the month tomorrow. So key numbers to watch. I want to see it start November beans nearby close above $10.80 or better. And maybe then we got the start of something that's breaking out to the upside.
Do you reward the market, the soybean market, with some sales at this point or wait?
You've gone up 90 cents in about 13 days on this market. Yes, you reward the market with some beans at this point.
So let's dissect the deal just a little bit. 12 million metric tons for 2025. That's like 441 million bushels. And then 25 million metric tons for 3 years after. Was that a good deal in the market's mind?
It was a good deal in my mind. I thought that was better than I was expecting to get back 25 million bushels on an annual basis. Gets us right back to what we used to be able to do to China. So that's good. On the nearby, I think the real question gets to be is, it sounds like the purchases of this 12 million metric tons, and obviously they bought some, but if they buy up to 12 million metric tons, it has to be done or is expected to be done between now and through January of 2026. So it's going to be a short window in which they would have to buy a significant amount of beans. That would at least get the beans back moving to the PNW. That would also be a positive sign there. Should eventually be a little bit more supportive here for the basis as well. So maybe it gives you a little bit more of a short-term move to the upside. So if we can finish this market, close above the highs that were posted today, I'll do that tomorrow. I think the market's got some opportunity in which to move higher, maybe seeing something closer towards 11.75, maybe even go to 12 and a quarter.
Well, let me play devil's advocate with you. 12 million metric tons is basically half of what they brought in 2024 in the calendar year. And so I guess, what does it do to the balance sheet going forward here? Do we still stay at 300 million bushels on soybean ending stocks or not?
Well, I think the ending stocks probably don't change much. It's going to be just the short-term psychological move that you're going to see if the beans have to be purchased in a short window time, or this short window. And if that's the case, then I think you can have it for a market that gives you a little bit of a boost short term. Longer term, eventually what it would do is we're going to have plenty of beans in the world. You still brings in a weather problem, then becomes more on the friendly to bullish side. You have to create that. And right now that is not on the table.
Do you see in the China deal any other commodities that benefit? Sorghum was mentioned, but corn, wheat, cotton, any of the other commodities?
Well, I would say the one thing that you want to watch is wheat possibly, and only because we've heard that China was snooping around looking for some wheat prior to this. So in the world market. So maybe we get some business on the wheat. That would be a nice surprise. And I think too, you need the wheat market to go on up in order to get the corn market a little bit more on the favorable side as well. So if we can do that, that would possibly help out the corn market.
What about the corn market? It did set back. Was that because the market was disappointed that corn was not included in the deal, or was this just some routine end of month profit taking and farmer selling?
I think this was more of farmers selling. The selling the last couple of days on corn was quite substantial. On top of that, most of the elevators in the upper Midwest are now full. So there's a lot of corn around, a lot of corn piled, things like this. I think right now you're getting into the weather pattern has shifted from wet back to warmer and drier. You're going to be in the last thrust of harvest for the next 4 to 5, maybe 6 days, and the corn harvest will be over with. And then maybe it stops. But we're already seeing some elevators already full and taking cash only on corn sales. They want to bring it into the elevator. So you got to find a home for the last of this, and that's where the pressure came, in my view, on the corn market.
Yeah, for sure. There's a lot of piles out there already. So getting this last quarter of the harvest tucked away is going to be pretty tough, isn't it?
And that it is going to be a hard time to find room for that for the time being.
What about the wheat market? Did it also just see some profit taking? We've had a pretty good run off the 5-year lows.
We did. The wheat market has performed better than expected. Not a lot of news that's changed the market. In fact, any news, quite frankly, is a little bit more on the negative side. And I point that only to the fact that the weather this past week put down some very good rain across the southern plains and across the northern delta and the southern Midwest and the eastern corn belt, across most of the winter wheat belt. The wheat is, for the most part, planted. Now it gets the rain, and now you go back to some warmer, drier weather after this. Should get the wheat crop off to a very good winter wheat crop off to a very good establishment before it comes into dormancy.
The cattle market has been trying to recover the last couple of days here, and we do have news that the Mexican border is going to stay shut now. And so, do you think that this market is in the process of trying to bottom or not?
Well, the news of the Mexican border staying closed, at least for the time being, certainly gives it a little bit more of a thrust to the upside. We saw that yesterday with the futures market making a strong move up. Today, we traded both sides. I think the jury's still out on this one. Eventually, if the border does get open, and maybe it takes us till December in order to do that, then possibly we'd start seeing some more downside. You've got a recovery here, good to see. But I think for the most part, we're still going to be tight in cattle numbers. You still have to worry about whether or not Brazilian tariffs are removed. If that's the case, then of course casts a little bit more negative tone. I think in the big picture, to me, President Trump wants to have lower beef prices. I think eventually, one way or the other, he's going to get lower beef prices.
Yeah, and you did in reaction have a $30 drop in live cattle, over $50 in the feeder cattle futures. But, the market's been pushed or pulled by the cash market. When does that come back into play?
Yeah, very good point. The cash, I think, is still going to be the thing you want to watch here for the next 2 to 3 weeks. And it looked like today, at least, that the cash bids by the packer, they had to bump the bids up in order to try to entice some type of farmer selling. So we'll see if they can get the cattle bought for $234 or less. They probably get themselves closer to being out of the red and into the black. If they have to pay more than that, it keeps a little bit more in the red. Here too, I think the demand's good, and I think also the one other thing is you're coming into the seasonal time period when beef usually has a pretty good push to the upside. So we'll see on the domestic side. So we'll see if that can continue to move a little bit better there. So to me, cash is going to be the important one to watch.
Hogs ending mostly lower except for the nearby December contract. And we know cash trade has been falling, so that's part of it. We've had technical selling, but are we getting close to a bottom?
Well, I thought we were getting close to a bottom about 5 to 6 days ago, and that did not happen. And now had possible a little bit of timing the other day. That didn't happen. The market is not trading well on the technical side. When you start out a market and we trade higher early in the morning, and then we give it all back at the end of the day and we're closing on our lows, those are not good trading patterns that you want to watch. So it's in a bear market yet at the present time. You can't seem to get the cash or the cutout to move higher. Obviously, pork prices globally have been in descent. So maybe we're going to continue to go, which probably tells me we've got adequate supply of pork globally, and that probably results that our export business is going to be a little bit lighter this year. The hog market's been up at high prices because of significant health problems that we've had in the hog industry for the last 2 to 3 years. Right now, we'll see whether or not that problem rears its ugly head again. If it doesn't, then obviously we're going to have adequate supply of pork in the long-term picture.
Yeah, and you mentioned exports. Either in the case of beef or pork, do you expect any China business, even if we lower tariffs?
If there was any business, I could see them buying beef. I cannot see them buying much on pork.
And that's because they have enough of their own pork supplies right now, right?
Yeah, pork is at 5-year lows in China. We're already hearing that there's already looking at liquidation due to poor prices and poor margins.
Gotcha. All right. Thanks so much, Mark Schultz with Northstar Commodity. That is Markets Now.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win. You get to be right. Don't just win. Win. Talk with your retailer or visit Brevant.com/win to get started.